finally is the end for resale condominiums. Let's talk about this today. Guys, many of you may have seen this article. It says that condo resale prices fall for the first time in 10 months, SRX and 99.co says, and immediately you'll be thinking like, oh, now resale price going to drop, and those people that have not bought will be celebrating because you're beginning to see the drop in pricing. And today I'm going to talk about this because it's such a long article and contains a lot of information, some useful, some not that useful. In a nutshell, I'm going to break this down for you. So how this video is going to be done is, number one, I'll be going through the TLDR version of this article. Next, I'll show you historically what happened when condo resale prices fall in 10 months and using facts and figures. And last but not least, I'll be sharing with you what you should be doing as a buyer and a seller. And if you enjoy watching content like this, do me a favor, like this video because it's going to help me a great deal. Thank you so much. Coming to the TLDR version, it says that in the RCR region, prices were down 0.8%. However, in the CCR and OCR region, prices were up 0.5% and 1% respectively. Island-wide condo resale prices are still higher year on year by 3.7% in the CCR, 3.3% in the RCR, and 3.9% in the OCR region. So what it says over here is that yes, there's a slight correction in terms of pricing for the month, but overall, the entire year, we are still up by 3 to 4% in all regions. The overall median capital gain was $368,000 in October, an increase of $9,000 from the previous month. District 20, Ang Mo Kio, Bishan, Thomson posted the highest median capital gain at $650,000, while District 2, Chinatown, Tanjong Pagar posted the lowest at $143,000. The overall median unlevered return for resale condo was 29.6% in October. District 20 posted the highest median unlevered. Do you know what it means? I went to Google. It means without minusing cost lah. That means gross lah. Highest median unlevered return was at 45%, while District 2 Tanjong Pagar posted the lowest at 14.1%. So again, this story is very clear. District 20, if you ask me why posted the highest gain, was largely also because of the recent slew of new launches in the Lentor and also Thomson East Coast Line area, which pushed up the resale condo prices in Ang Mo Kio. So as we investigate District 20, what condos are there? There's Jscape, there's Panorama, which is about 7 years old, Sky Habitat, TOP 2015, Skyview, TOP 2016, Bishan Park Condo, the older ones, Gardens at Bishan, Thomson Grand, which is fairly new. I would think that if you are using all these, Clover by the Park, certainly one of the most champion one, makes the most profit. So if you ask me, in a district whereby there are a lot of old condominiums, making more profit sometimes doesn't really mean that it's the most profitable, because if you hold for a longer term, your annualized profit will also be lowered as well based on the number of years that you are holding. All in all, I think this article, which district having more profit, doesn't really mean that buying into the district will actually yield more profits. It's more to what are the attributes of this development, what's the age of this development, what is the potential upside, any future development around there, and last but not least, how does your entry price compare with the last transacted price? If the price is pretty close or slightly lower, or if you're paying a slight premium because this unit fulfills a certain attribute that other units don't, then this will be something more crucial, if you ask me, when you're shopping in the resale market, because resale is not like new launch. Once you want one district, you can choose what are the units you want. Like for example, right now I'm helping my client look for a unit in the Penrose, and so many different kind of asking price. Basically, when you search Penrose 2-bedroom 1-bath, you will see like 20 to 30 listings. I wouldn't think that all units are priced equally. As of the time we are recording, I'm currently negotiating for my client as well. Yes, we are paying slightly more, but then we are avoiding the expressway facing. Not saying that expressway facing cannot sell. I've sold expressway facing before. I bought expressway facing before. Most importantly, it's about the entry price. But sorry, I digress. Back to the article. As for District 2, getting the least amount of profit may sound like it's not a very good investment. However, if you look at this district alone, most of the time the buyers actually go for the rental game plan. Why? Because if you compare the rental in this area just by using a 2-bedroom, for example, comparing it with the rest of Singapore, you can see that the 2-bedroom commands at a peak of $7 per square foot, whereby the average returns for the rest of Singapore is about $5 plus per square foot. Even till this day, even though rental prices have actually tapered tapered down already. You can see that there's still a reasonable gap of 20 to 30% rental, which means you're getting higher rental when you're buying into the District 2. So here are just some examples of the different rental use around the region for your reference. Oh, by the way, have you already subscribed to the channel? If you have not done so, please do so right now, because I'll be posting regular content like this that shares my personal views and also insights about the property market. Thank you so much. So to sum things up on this article, basically year-end festivities makes resale slow down resale activities lah. But if you ask me, it will eventually rebound once again, which I'll be talking in my next point. Coming to what happened historically when similar situations occurred, we will go back to data to see what story you can tell over here. And as usual, I always say that we don't look at per month basis. Why? Because sometimes the prices go down because there were more transactions in the OCR area, hence the overall pricing actually goes down. Or there could be more transactions maybe when the EC has just made its MOP and there are units transacting at about 1,000, 4,300 plus PSF. So having more of those transactions will naturally pull down the prices. Likewise for RCR, which is one area, the prices can be quite elastic. Why? Because when we are talking about RCR region, they can be all the way from Upper Bukit Timah, where reserve residences is, all the way until River Valley area. If you know Union Square residences, that cluster, or Rivier, which is the former Zouk, that falls under the rest of Central region as well. So when there are more transactions in the Upper Bukit Timah area, example Daintree and whatnot, it naturally pulls down the average PSF of the RCR region. So better way is to look at least by quarters. So even if you're looking at the price per month, right, you will see one interesting trend. So was it the most drastic? I would think not. Why? Because in April 24, based on my search result over here, I can give you my filter summary. You can go check it out yourself. 1 year transactions done in the last 1 year, apartment and condominiums, sale type resale, not including new sale, not including EC, also not including the subsale. And I can see that there are similar occurrences last year in October and November, where you saw average PSF prices drop from $1,688 per square foot all the way until $1,640 per square foot, which was also during the festive period. And you see that in November 2022, you saw prices actually go down in that month itself, and it's quite obvious it's really because of festive periods. But more importantly, when you look at data like this, you realize one very common trend is that the new low usually won't hit the previous low, and the new high are usually higher than the last high. So that's the reason why when you're buying a property, make sure you have the holding power for at least 3 to 5 years, and then all this kind of data doesn't really concern you at least for the next 3 to 4 years until you clear your seller's stamp duty. And before trollers come in and say that,
hey Marcus, you're just using COVID. Why? Because COVID prices actually went up a lot more.
Okay, fine. Let's take a look. On the longer term, switch to quarterly and see for yourself as well. Ever since 2014, has there been any occurrences whereby the prices drop below the previous low? See for yourself. And in fact, if you want to trade out even for longer term, right, it's just proven over and over again that waiting to buy, hoping that the price will be cheaper, usually will not end up very well lah. So which brings me to advise what you should be doing as a buyer and a seller who is looking out to buy a property in the next couple of months. So what do you think about this data? Does it show that the prices is not really going to go down? It's just a temporary slowdown because of festive period? Let me know inside the comments. So what would I do if I'm a buyer and a seller today? I'll fall back to my 3 golden principles. Number 1, start saving and invest as early as you can. Number 2, constantly upgrade to increase your asset net worth. And last but not least, try your best to have an 18 months buffer, if not a 20% reserve funds. So for buyers, pure buying, or let's say you have already decoupled from your existing property, or maybe you sold your first property and then you already bought one, you got one more name free, I would think that this is quite a crucial moment. Why? Because even though you see slight resistance on the resale market, however, with interest rates going down, do you think there'll be more demand in the next coming year or less demand in the next coming year? And studies have shown that during low interest rates periods, you see prices of properties actually shoot up quite rapidly, and this may signal the next cycle of property market. So some will be telling me that
No way, Marcus, the price didn't go down.
according to what you see, the prices didn't go down. However, if you study the data and you look at the chart, actually there's been slight correction from 2022 since means the interest rates will actually increase. So you saw the median pricing actually go down, but nobody talks about it. I would think that next year onwards, you could potentially see the next cycle. That's why for me, I also a bit kanchong to want to quickly decouple and take my wife's name out to get our hands on something before the prices actually go up one more notch already. But having said that, I'm not saying that you can just buy anything you want and leverage or wherever you want. You still need to ensure that you have sufficient buffer to tide through 18 months and have to make sure that you're not overpaying. As for whether a new launch or a resale, I would think that if you're another buyer that's hoping for the future launch, and then you want to put one ballot ticket there to hope for your luck to get the number you want, I will rather you look at the current existing market. And I've just done a sharing with my team. With some existing launches, there's still some post launches which have units that are reasonably priced, safe, and most importantly have reasonable amounts of potential upside still. If you wish to find out more about these current post launches, this is my number, you know what to do. And if you're looking to buy a resale because you don't have the time to wait for 2 to 3 years for the property to be built, I would recommend maybe looking at Subsale as well, because Subsale is usually buying in at stage 3. So stage 1 is new launch, stage 2 is post launch, stage 3 is during the TOP, and then stage 4 will be the stagnancy phase in the resale market during the CSC. So if you're buying in right before stage 3 happens, you may be able to get a little bit more potential upside. But do remember, don't forget to compare around, because in the resale market, sometimes when you pay too much profit to the first owner, that could pose as a threat in the medium term. However, if you're buying in for own stay, right, most importantly, I cannot emphasize more, is you need to make sure you are making apple to apple comparison when you're comparing prices. So if you're a seller, there are a few kind of scenarios. You could be selling a property to upgrade, you could be selling to downgrade or encash. I would think that today, if you're looking to sell and downgrade to encash, unless absolutely necessary, you need the money very soon, I don't see a need to rush to sell your existing property, because as mentioned earlier on, the advice for buyers, I would think that next year there will still be some growth, and if let's say the interest rate continue to be low with elections coming in, I will see a boost in terms of the economy. So no rush to sell unless you can get a good price. If you need someone to help you to sell, you know what to do. And if you're selling to upgrade, I would think that try not to be adamant on the record price that you're asking for. Try to sell at the current recent transacted price, and then since the market is a little bit quiet right now, go out there in the resale market or even the new launch to negotiate in terms of the resale, and also look for good buys in the new launch market before the interest for property returns after the festive period. So in a nutshell, for the seller, if you don't have any plans, don't need to rush. If you need a plan, give me a call, because like I always say, cash is trash. Property is still one of the safest investment, and not so many secured loans can allow you to 4x your money at a measured risk. Sorry, I mean with a measured risk. So basically, make sure your money is hedged against a property for the least, and no rush to sell cheap. Because if you follow the channel for long enough, the new high for property is always higher than the last high, and the new lows will usually still be higher than the last low. As long as you have a holding power for 3 to 5 years, right, the chances of losing money is minimal, and most likely there will be some potential upside if you select the right property. So as usual, like, comment, subscribe, turn on notification bell, because we post weekly real estate videos like this. With that, thanks for watching, and I'll see you next week in my next video. Bye.